What's going on, everybody? It's Rinsing Trades. We are live streaming on YouTube and X. So if you're watching this back, welcome back to another stream. This is all going to be recorded and put onto my YouTube channel so you can go and watch this back. Eventually down the road, I am going to send an invite link. So whether you're on YouTube or X, you can click this link, and if you have the StreamYard app on your phone or computer, you can actually join this live stream, and we can have discussions, talk about selling options, or really whatever. If you've never been here before, or if you've never seen me on X, my name is Richie, aka Rinsing Trades, and I short options in the stock market. Basically, I sell the option first and then try to buy it back or let it expire worthless. So that's pretty much what I do for my investment strategy. I've gone through many various investment strategies, from day trading penny stocks to day trading S&P 500 options, like on the 1 and 0 DTE. And then I've done dividend investing, and now I've done this. So I've got lots of experience in the market. Even though I do look young, I've been doing this for a really long time because I've wanted to always be a really good trader. And now that I have a solid strategy and I know that this works, I'm trying to teach everybody this and get this out there, because not a lot of people know or understand how to invest in the first place, and they definitely don't know or understand how to short stock options. So I see that we've already got 52 people in this chat, which is or in this live stream, which is absolutely amazing. So I think that first of all, I should start off by doing a little bit of a portfolio update. So I will run through currently all my positions. I'll show you how much I'm up year to date over the last year, and then I will also show you my realized profits. So I believe if I click on this button here, bam. All right, so here's today. We're down 0.62%. I believe the S&P, let's see how it's reacting. It's probably going to be down as well. Yeah, so as of right now, it's down 0.12%. So we're kind of, because I'm shorting stock options, my portfolio value is going to be a little bit sporadic. So on like slightly red days, my portfolio is going to be drastically more red. And on green days, my portfolio is going to be even much more drastic to the green side. So you can see up here in the top, I already have pending orders trying to close stuff out for gains to try to release that collateral so I can sell more put options. I was looking at OSCR, but if any of these close out today, then I'll be diving in and trying to sell options. Either hopefully it'll be live. That would be really cool if I would be able to close these out for a gain on camera, and then I can sell more options live for you guys. So hopefully, if anybody, how old am I? I am 26 years old. 26 years old. Crazy to think. Sometimes I even forget how old I am, but yeah, I'm 26. Time's going by fast, man. So anyway, my portfolio value is right now sitting at about basically 113 grand. Over last week, we're up 4%, about $4,000. Last month, we're up 9%. Over the last 3 months, we're up 18%. Year to date, we're up 55.5%, and over the last year, we're currently up about 82.6%, 83% if you want to round it up, because the guys always round up, if you know what I'm saying. So these, as of right here, everything is going to be, all these percentages you can see here, these are all set to total return. So the total return above is in the cash value and below is the percentage value. Something I will say is, as your portfolio value gets bigger and bigger and bigger, and even for smaller portfolios too, you should never look at something as a monetary value. And what I mean by that is, you should never look at how much money necessarily that you're making off a position. Because what happens when you look at a dollar value, especially on a smaller portfolio, is you're chasing for this massive gain, because you see stuff on Twitter, or X now they call it, or whatever, of people making hundreds, thousands of dollars, all these things. If you have a small portfolio and a big portfolio, it doesn't really matter. You should be looking at everything from a percentage based, thing. So that way it takes all the emotions out of it. That way you're just looking straight up as percentages. When I did that, it changed my mindset completely. But anyway, that is set the total return. Here are all my current options positions. If you look at them here, this is pretty much everything that's open as of right now on the option side. Now, if I was to run through every single one of these, it would take me a long time. I actually just sold this Lulu call against my shares here. You can see this is the stocks that I currently own as of right now, set to total return. And some of you are like, well, you know, some of these are down. Like AMC's down 32%, Kava's down 19%. You know, some of these, CRM is just that's a swing play. HIMS, you can see I'm down 13% currently, blah, 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 all these stuff. The thing is that you got to understand Robinhood is only reflecting your average cost basis when acquiring these shares. They are not reflecting the cost basis decreasing over time from shorting the options. You have to manually calculate that out, which is why I use this spreadsheet. So for example, if we went to HIMS, and I've wheeled this a few times now, you can see I've got HIMS 1 and HIMS 2. If we click on HIMS 2 here, this is going to all calculate here. These are all P&Ls on the side. You can see that my break-even price, or my adjusted cost basis, they call it, is $34.78. Meaning that even though, like on Robinhood, my HIMS right now, you can see it says I'm down 13.3%. And that's because my average cost that Robinhood shows is 57.36. That's why it shows that I'm down 13%. When in reality, on this position specifically, my break-even cost is $34.78. So the beautiful thing about shorting stock options is that it's one of the only ways outside of dividend investing where you can actually collect enough money on your investment to where your cost basis could actually go negative. Meaning that even if the stock, if HIMS in this case, if over a period of time I was able to sell calls, sell puts, sell calls, sell puts over and over and over and over again, eventually that cost basis is going to go to zero and then also negative. So if HIMS even went to zero and they went bankrupt, they went out of business, whatever, that means that this play is free no matter what. Like, it could go to 100, it could go to 20, it doesn't matter, because at the end of the day, I'm going to still win, which is why I absolutely love this strategy, and it's game-changing, it's life-changing. You're basically creating, by selling these options, you're basically creating your own dividend, is how it feels. It's not taxed that way, so don't get that misconstrued. It's definitely not taxed like a dividend, but it feels like it because you're constantly getting money deposited, and it's cool because you're making like almost like a dividend off of stocks that don't even have dividends, which is crazy. Let's see, what did Tim say here? If I sell a call without owning shares, will they take collateral? So if you sell a call without owning the shares, you're asking about selling naked calls. So for the people that in the chat that don't understand what selling naked means, that means that you are selling the call, in this case, like what Tim has brought up, without actually owning the underlying shares. Now, that's something that I don't do because Robinhood does not allow you to sell naked call options, and they don't allow you to sell naked put options either. So everything in Robinhood is always covered strategies. So to answer your question, I'm not necessarily 100% sure and versed on this specific thing because I've never thought about selling naked calls. That would probably be a better question for either the brokerage that you're using or somebody that does this on a daily basis. I think like TJ the Wheel Deal, I think does naked calls. I know he does strangles a lot without owning the underlying. So in that sense, he is selling naked on the call side. So that's something that is probably a better question from them. But I imagine that if you're selling a naked call, you're going to have to like be able to cover the money somehow when you're selling those options. So yeah, at some point in time, you're going to have to pay the piper, I guess. Nothing's a free ride, so I would imagine so. What do I think about SOXL? Well, this is what I think about SOXL. Let's go into my thing here, and am I able to search on my portfolio here? Let's see, profile, Can I search on here? Okay, let me type in something. This is what I think about SOXL. I'm going to go to the latest, and I'm going to scroll down. This is something I had a lot of hate on, and everybody was sleeping on it. Let's see here. So as you see, I was shorting put options on SOXL at 18.5. I like SOXL. SOXL, great buying opportunity, question mark, right down at like the 19 level. I know at some point in time, I had a picture. Oh, here we go, right here. SOXL 6x play from here, 1074. Don't we all wish right now that SOXL was still at 1074 if we would have known? With what we know now, don't we all wish we could have like bought a ton of call options? Because if we go and look at, I'm going to bring this over here, SOXL. Let's look at the 1 month chart. 30.37. So from me saying this is a 6x play from here, it's now already 30.38. So I like SOXL. I think it's a great derivative to sell options on. It's a good leveraged play. I really like it. So yeah, that's my thoughts on SOXL. But yeah, guys. So I mean, my portfolio has pretty much just been cooking. You know, I've just been selling options over and over and over again. As of right now, since I started doing this, I wonder if there used to be a premium. Okay, yeah. So this is the number right here. Oh, you can't see it, unfortunately, because my banner's in the way. But since I started doing this in May of 2024, I have collected approximately, as of right now, $61,978.02. And that's pretty good, figuring that a little over a year ago, I was down below $60,000. So I've pretty much doubled my portfolio value size since then, which is pretty wild. What up, homie? How are you doing, bro? If I believe in a company, why would I go with a cash secured put and try to wheel instead of just buy call options where I can make more money? Is it just about safety? So there's multiple strategies you can do. Buying call options is a perfectly fine thing as long as you're doing it the proper way. So for me, if I'm trying to own the shares, meaning I have enough capital to continuously, like say the stock was, $15, $20, whatever. In that case, I would rather sell put options on that because I can sell, 5, and then I can sell another 5, and then sell another 5, as long as the stock continued to decrease. Now, where buying call options really makes a difference is that buying call options for a long term, like I would never buy a call option if it was like inside 180 days because time is working against you, right? So the more time, the better. The best thing about buying call options is that it is extremely capital efficient, meaning that you can buy a call option for like a quarter, a sixth, an eighth, or even sometimes a tenth of the total value of the stock for a tenth. Meaning like on Lulu right now, like let's take a look at like Lulu like call options. Like if I was like didn't want to allocate 100 shares, which I already have, if I didn't want to allocate 100 shares into Lululemon and I was trying to be more capital efficient because like let's say there was a lot of plays right now and I'm trying to put money in a lot of places and I'm trying to be as efficient as I can with the money that I have, I can control 100 shares of Lululemon for a fraction of the price. So you can see that this call option right here, this 150 call, if I was to buy 100 shares of Lululemon, it would cost me right now how much money? $16,400, right? Well, instead of buying 100 shares and shorting put options, like I could short a put option like what you're saying, like you believe in the stock, why would you short a put option? This would be a great example of when you would want to buy a call. Because with my portfolio value, instead of shorting one put option and then if it goes down, short another one, then I have over $30-something thousand allocated into one position. I can just buy a call option for $5,000, which is or in this case, $4,670, which is a little less than a third of the price and you're controlling the same amount of shares, the gain will reflect the same as 100 shares if you're correct and Lululemon does go to the upside. But then if Lululemon dips and I'm still confident in the play, then I can add an average down on this position without me having to put in 16 grand, another 16 grand, another 16 grand, because then you're going to be over allocated, right? So for Lululemon, this is a stock that I was hoping to get it on a bounce earlier, and it unfortunately continued to go down, and so I just eventually averaged down to get myself to 100 shares, and that's why I just recently sold a call against them, because right now my average cost is 180.109. I sold the 200 call, so if I'm correct and Lululemon does go to the upside, then I will sell Lulu on January 16th, 2026 at $200, and I was also paid $845 in premium to be able to do that. I don't know why this screen is taking so long, but let me go back down to that Lulu call here. But yeah, so like there's multiple different strategies. There's many ways to skin the cat. But in my opinion, like here you can see I was paid $845, which basically means that if Lululemon does go up, like I think it's going to, I will eventually sell these shares at an average cost of $208.45. That's what that means, which is above where I bought them at 181 and some change is where my average cost is now. So either way, I'm locking in the win because this average credit is decreasing my adjusted cost basis, and I'm totally fine selling Lululemon at 200 because it was a swing play to begin with. But there's multiple ways to skin the cat. No one strategy is necessarily more right than the other. But with these cheaper stocks that I like to deal with, like Sweetgreen, MSTX, Rivian, TSLL, HIMS, Zeta, BMNR, all these kinds of stocks, in my opinion, it's better to sell put options, get paid a bunch of premium up front, and continue to sell put options over and over and over again to acquire shares cheaper than what the stock actually is, than to try to buy call options where the time is working against you. Because with selling put options, I'm usually doing it within between 30 to 45 and sometimes 60 DTE, so the theta decay is extremely strong. So hopefully that clears it up for you. I mean, buying call options is totally fine if you're buying them like 180 days till expiration plus. Like right now, I probably wouldn't buy any, like I would probably buy, if I was looking at it right now on a leap, I'd probably do at least a year. But that's me personally. So yeah, I'd like to, now I'm going to, hey man, Awesome Mercury doing for all of us had a question. Yeah, what's up? Ask your question. Ask away. I'm actually going to try to figure out, I'm trying to remember where the link is. Oh, share your referral link. Oh, no, not referral link. I need to invite. How do I invite people to this stream? Oh, here it is. All right, copy. Okay, I'm going to post in the chat. This is the link to the stream. So if you would like to join, we can have a discussion. You can ask questions. Hopefully, we can answer questions in the chat too. Like if you're sitting here right now, feel free to comment, feel free to ask questions. I'm here for you guys. Like I said from the beginning, I've been doing this a while. I may not be right 100% of the time, but I try to be. So if you guys have any questions, feel free to ask them. And Mikey's, what's your all-time percentage? So my all-time percentage is a little skewed because I have flopped brokerages many times. I started off on Robinhood. I went to Webull. I went to Fidelity. Then I went back to Webull, then back to Robinhood. So I started this portfolio about 2.5 years ago. You can see it says in 2022 I started it with $59,000. That's not true at all. I started this, I had this account, and then I transferred the money in, and that total value was $59,000. So I started this portfolio about 2.5 years ago with about like 25 or 30 grand. Now, that being said, through the years of day trading penny stocks, day trading S&P options, day trading options in general, all those things, I blew up like a few small portfolios, like $2,000 portfolios, $3,000 portfolios a few times, like about 4 times. So but those times where I did blow up those portfolios has turned me into the trader I am today. So all time, you can see it says 88.4%, but over the last year, I'm up 82.6%. So like I've transferred brokerages many times. So like this, if I owned this brokerage from the get-go, it would be a much bigger percentage gain because I transferred this money in. Let's see. When the markets are in an uptrend, how do you select stocks? If they've run up a lot, the premiums wouldn't be that good if you're at Delta 0.2, 45 DTE. Yeah, so I follow a very specific process whenever I'm deciding whether or not I want to get into that stock. So the first thing I ask myself is, do I like their product? Would I use their product? Do I like the company? So on and so forth. Because if I don't like their product, if I wouldn't use their product, then I don't even want to own their stock. Once I do that, the second thing I do is I open up Google Finance and I type in their ticker. So like HIMS. Like I like HIMS. I think HIMS is a good company. And then I open up their annual income statements and make sure that they are still a growing company and everything is moving up and to the right. That's step 2. Then step 3 is, then I go and look at the chart. And I look for an entry point. So like to your point, if it's overbought, then I'm not going to sell put options on it because the likelihood is that it will come down. So like HIMS right now is showing bearish strength. The likelihood that HIMS will most likely come down to 41.22 over a period of time, or 41 and some change, is very strong right now. As you can tell, this yellow line here is the 50 EMA. It's bounced many times. I don't know why that just flipped like that. That's crazy. How do I do that? Oh, here we go. I need to put this back down. I don't know what the hell is going on here. How do I reset this shit? That was weird. Anyway, HIMS has bounced off that 200 EMA many times, or 50 EMA many times. What the hell is going on with this damn thing? I gotta like refresh this or something. Reload. Here we go. That's what I'm looking for. All right, HIMS. So I only trade based off of the daily, weekly, and monthly charts. And sometimes I even have to zoom out a little bit more. But like the 1 week chart on HIMS is very telling. So like this yellow line is the 50 EMA. It bounced here, it bounced there, it bounced there. Most likely, if it comes back down to this yellow line, odds are it will probably bounce off that line again. So HIMS, I like it in this range here. This is fine because it's probably going to bounce soon. And HIMS also has a lot of momentum. So in that case, I would be comfortable selling put options on HIMS right now, which is what I did. Then the next thing is I go into the stock, and then I open up its option chain, and then I figure out whether or not the premiums are worth it. So then I'll go in here, I'll go at least 30 days out on the third Friday. I'll go to about a 0.3 delta, and then I'll make sure that I can get at least 1% per week return on capital. So in this position, if I was going to open this position today, this 46 put, I would want to make sure that I'm able to get at least $46 per week that I have this open. So in this case, this is 4 weeks. So I would want to make sure that I can get at least $46 times 4. I want at least 1% per week return on capital. So if it's less than 1% return on capital, I'm not even going to sell puts on it because the premium's not worth it. There's a lot more plays. There's a lot more things I can sell puts on. That's going to get me a lot more premium for the same collateral value. So hopefully that makes sense for you. Best stock picks today, HIMS, OSCR. Let's check. There's a few. HIMS, OSCR. Let me check my watch list here. Zeta looks good. MSTX I like a lot. Rivian's good. Sweet Green I think is good. TSL is a little overbought right now. Mara's good. All these things. All those plays are great. Looking to start selling cash secured puts, trying to figure out why someone would use margin. That's a great question. Lots of investors are very afraid of margin. But the thing is, with selling put options using margin, as long as the puts are not assigned to you, brokerages, for the most part, now I don't know what brokerage you use. You would have to look at that for your own, but at least on Robinhood and a few other brokerages I know, that even if you are using options collateral, like if I go down here, you can see my cash is 49 grand. My options collateral is 84,600, right? So obviously, just in that, I am using margin currently to sell put options. But because I am not actually using that margin, meaning that I haven't been assigned those shares, then I don't actually get charged margin interest. So I actually am able to basically, it's like someone giving you money without charging interest, and then you're able to make a return off that money for yourself without actually being charged anything. So now if the stock market tanks, you go into the shitter, you could get margin called by doing this. So there is downsides. It's not always a plus side, but the plus side is for selling put options specifically on these stocks is that you can short put options with the margin and not actually pay interest, which is a big, that's a big thing. What up, bro? What up, Gio? How you doing, dog? What up, Roberto? A firm. What do you want to look at it? You want to look at a firm? AFRM. Let's check. AFRM. Are you saying it's good or what? Looks like it's been on a ripski. That's the weekly. Let's look at the monthly. Oh, looks like it's wanting to form a little cup here. Boom. Probably going to do something like this. A little handle and then a rip higher probably. Let's look at the daily. All right. Yeah, man. I mean, it looks good for right now. This will probably continue a little bit higher. I always start to get worried whenever I see... Let me see. I got to fix this mic here. I always get worried whenever I see this RSI start to get this green shadow underneath of it. Like you can see this RSI here at the peak was like 83. Once you start getting like RSI above 80s, that's when you should start probably being or expecting a pullback. But as of right now, it looks pretty damn good. Looks pretty good. Let's see. Thanks for the explanation. Super helpful. The only thing worries me is that how you tackle trades when the market turns eventually. All the cash secured puts would be assigned. Do you think one can end up bag holding stocks, can't even sell covered calls? Then because the stocks come all the way down, haven't experienced that yet. Yeah, so that's always a possibility investing in the stock market. You always have to be prepared for the times that the market does eventually take a downturn, which is inevitable. It will happen at some point. How you mitigate that is by doing exactly what I'm doing. You are investing in companies that, first of all, not only you like, but other people like too. They make a good product. Second of all, you look at their finances and you make sure that the company is still growing. So it's not some bullshit company in like Colorado that's like selling like dab pens, right? Like Hims is a solid company with a good cause trying to make a difference for not only men, but women too, right? So like let's use Hims as an example. Profits are going up and to the right, and we're using the technical analysis to the best of our abilities, find spots where Hims is most likely going to bounce or consolidate. So if you're selling put options on Hims, right? And let's say Hims takes a drawdown to 30, 25, pick whatever number that is. I like Hims. I like the product. I think the company is fantastic. So I don't mind if Hims goes down. Yes, my portfolio value will decrease. Was I wrong on the cash secured puts for selling them there thinking that it was going to bounce? Some could argue that maybe not necessarily, because if Hims is at 50 right now and I'm selling a 46 put, I look at it from the other side of things where I'm trying to acquire these shares for cheaper than what the stock price currently is, and I'm also being paid to do it at the same time. So even if Hims draws down to 30, I'm still winning, dude. Like, either way, the win is the win. I'm locking it in. Hims goes down, I get the shares. Now I can sell calls against the shares. And to your And to your point that, yes, the stock could draw down to the point to where you can't sell the covered calls above your cost basis. But great news is that there's a thing called rolling. You can roll your option. So I always, no matter whether it's above or below my cost basis, 0.3 DTE at least 30 days out. If the stock decides to come back and rise, then you can go out and out and out, and eventually you can get to the point to where your covered call is above your cost basis. So either way, I'm constantly, no matter where the stock is, regardless of my thoughts on it, gonna skyrocket, gonna tank, gonna do this, gonna do that. I'm always selling puts, I'm always selling calls, I'm always collecting premium, because the name of the game is getting that cost basis to zero. Like whenever I first talked about in the beginning of the video, if you are able to, over a period of time, continuously sell puts, sell calls, collect premium over and over and over again on HIMS, let's use that example again, I can get my cost basis to zero. It can go negative even. So in that perspective, if you're selling puts, selling calls, doing all this stuff, and then the market does tank, and your cost basis is negative, and you say like, you're just like, you know what? There's better plays out there than HIMS. Maybe I'm going to find something that's, in their more beginning stages of growth. Then you could just liquidate that position right then and there and get out of it because your cost basis is negative. So who gives a shit? Like that's my thoughts on it. That's the way that I look at it. Thoughts on cash secured puts for BMNR. Here's my thought right here. 40 put, BMNR. Already did it. $690 in credit. Sold that on August the 28th. Current price is $418. I'm up on that position 40%. I like BMNR. I think it's a good play. What are your thoughts about Fubo and Sweet Green? Fubo, I haven't really looked at, to be honest with you. Sweet Green, I like. I've been selling puts on Sweet Green. I actually have, let's see, 5 $11 puts that are expiring and 3 $9 puts that are expiring this Friday. So the 9s, they may or may not be assigned. It's kind of like on the fence whether or not these will be assigned on Friday or not. But the 11s, I will probably be assigned on. And I will just sell calls. I'll just sell calls against the shares and keep bringing that cost basis down. And if I type in Sweet Green, I wonder, like, let's just say I had those shares today because I'm probably going to get 800 shares, 5, 6, 7, 8, yeah. So sell call, right? Let's just check to see what I could even do with this. So if I went to the 17th, 0.34, so that would be 1% per week return on capital. You see 10, 20, 30, 40. 4 weeks, right? 10, 20, 30, 40. How much is the option? $40. We could even go further. Well, hopefully soon they'll open up the November contracts, and there will be a November 21st contract there, which is the third Friday. But you could even go all the way up to January 2026, 121 days. And my cost basis on these shares is going to be, if I get assigned all 800, it's probably going to be like $9.90, $10 and some change because I was paid for both those. I was paid for both the shorting those put options, and I'm also like averaging down in a way. So you could sell like if you wanted to be aggressive, you can sell like an at the money or close to at the money 10 and get paid 1.35. That would be if I got 800 shares. That'd be $1,120. Not bad, right? You could also then even go up if you're like, well, let's just do a 0.3 because that's usually what Rensing Trades does. Well, the 13 call, that's going to be well above your cost basis. You can do 8 of them at a 0.65, which is at the bid, so these will get filled for another $520. So today on Lulu, I think Lulu's probably going to go up, but I don't care. I want to continuously decrease my cost basis, so I sold this 200 call, like what I was talking about earlier. So I'm agreeing to sell the shares at 200, plus I got paid $845 to do so. It's literally a cheat code, guys. It's literally a freaking cheat code. Like, if you're not doing this, if you're not buying leaps and selling options, I don't know what you're doing. Selling options is the best. Yes, it is. It is absolutely the best. So, yeah. Yeah, guys, so that's the deal here. Let me check Twitter to see if I keep calling it Twitter. Do you guys do that? I always freaking do that. I'm always calling it Twitter. Let's see, has anybody commented on this? No, not yet. But there's a live stream right there. So if anybody wants to join in on this, I'm going to share this link one more time, and then if nobody wants to join, then that's okay too. But that is the link to the StreamYard there. If you'd like to join, if you have the app on your phone, you can totally join in. And let's see, people. Let's see. Yeah, I don't think anybody's tried to join. But yeah. What other questions you guys got? Yeah, I kind of just wanted to do like a little bit of a portfolio update for you guys. I know I haven't done one in a while. I've been working like crazy. I've got a lot of days off now, so I'm gonna try to crank out some YouTube videos for you guys to make this. You know, I'm gonna try to crank some YouTube videos out for you guys and get some things there. So if you guys would like, you know, send me a DM with some videos you'd like. You know, you can send me a direct message on X. I'm gonna see it. I look at every single message I get, except like those bullshit ones from like those AI like ones in the I don't even know what it's called, like the like basically it's like the dark web of X. It's like the messages that like go in like the back burner, like they know they're fake. Like if your message is going in there, you should probably not have an account, kind of thing. These puts should be closed soon. You see these riot puts here? These should be getting closed out pretty soon. I'm at an 80% gain. That's usually where I close these out here. I'm at $360 in the green for these. I believe I have an order for these at 0.16. So if these come down 2 more cents, which I think they're going to hopefully today, then these will close out here, and I'll release this collateral, and I'll probably sell puts on OSCR. OSCR. Let me make sure. Let me see how many open options I have on this. Yeah, I just have these 216. So yeah, that would be good. That's probably what I'm going to end up doing. And it's a down day too. So thanks for the explanation. Trying to get a hang of it. Started this year. Year of the inspiration. Up 24% so far from July to September. Keep doing what you do. I have some ideas on which you can make videos for us. We'll shorten the learning curve. Thanks again, man. Yeah, dude. Yeah, no problem. Thanks for being here. Thanks for taking the leap and shorting options and everything. Thanks for following me. I really appreciate it. So yeah, guys. I guess with that, that will kind of conclude the live stream for today. I just wanted to kind of do pretty quick. That was 37 minutes of me talking. My voice is starting to go out a little bit. But yeah, if you guys have any ideas, any questions, feel free. Let me answer this one real quick. What would you say is the best time frame to use when selling cash secured puts with 30 to 45 DTE? 4 hours or 1 day. I only use the 1 day, the 1 week, and the monthly. Longer the time frame, bigger the move. Bigger the time frame, bigger the move. Smaller the time frame, smaller the move, right? So if you look at the daily and you don't see what you like, go to the weekly. If you don't like what you see there, go to the monthly. Don't trade on the small time bullshit. If you're doing like swing plays, maybe I would go down to the 4 hour if I was doing a swing play. But for the most part, most of what I do is I'm trying to acquire shares via selling puts at a lower price than what it currently is, while simultaneously getting paid to do it on solid businesses. That's what I do. That's the motto. And you the shit, man. I'll probably be sliding into your Twitter bet, dude. Yeah, just hit me up. Tell me what you guys want to see. And we'll go from there. Thoughts on UNH? I'm not really touching it right now, just because there's a whole lot of other plays that I'm looking at. I really haven't looked at UNH. If you want, I can pull it up real quick. I'm going to do this, and I'm signing off. So, UNH. Let's see. Okay, so that was probably, if I remember right, the 200 EMA on the monthly. So when this thing came down here, when this thing broke and it bounced off the bottom line of the RSI, that's when all you guys should have been buying this thing. I was looking at it too. I didn't buy it because I was looking at 50 other plays. During this time frame, there was like so many things that were good prices, like TSLL, OSCR, Zeta, all these things that were just great plays. So I just didn't have the allocation value in my portfolio to be able to allocate to this. But I was saying on Twitter, hey, or X, this might be a good buy. And people were hating on me, saying, UNH, this thing's going to zero, terrible. I hate insurance companies, blah, 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 all this stuff. Well, if you would have bought, you'd be up. So with that, guys, I'm going to go ahead and sign off. Thanks so much for y'all's support. I really appreciate you guys so much. thanks for coming into the stream. Thank you for following. It really, like, every single time I log onto my Twitter and I see all you guys following, commenting on my stuff, it really makes my day and makes me want to come back to keep making these live streams and videos and posting on Twitter for you guys. So I really, really appreciate you guys, and thanks so much. So anyway, catch me on Twitter, catch me on YouTube, or I guess, sorry, X now. Catch me on YouTube. But anyway, I hope you guys have a great rest of your day, and let's hopefully see a rate cut and see this market hopefully skyrocket. So thanks so much, guys. Peace out. Love you guys.